Yeah, good afternoon. Good afternoon. So myself K Babu and my subject business finance for third semester. Okay, right. See, business finance. Business finance. The finance for business. So, so business is a long run for the longer period of, and so business won't start the business. So before start the business, if you have an idea about the business. So if you want to start the business, first we need a finance. Okay, the finance and the finance mainly support to the business. The finance mainly support to the business, right? So finance mainly support to the business. The finance may be generally defined study of money. It is nature, creation, behavior, regulation, and problems. The finance is a study of money management and deals with the way in which a businessman, investor, government, financial institution, and familiars handle their money. And understanding what money is does not foundable financial knowledge. The finance, business finance. So see, the business, if we want to start the business, so we want finance. And if we want to strengthen the business also, we need a finance, right? So what is the sources of the business? What is the sources of the business? So what is the sources of the business? Business finance. What is the source of the business finance? So how the business is collecting the from finance? So what are the sources? What are the sources, right? So the sources of the finance may some types are there. So in our book, page number 4, the types of business, the types of finance, the businesses, enterprises have several sources of finance, and there are discussed as below. There are the three broad cost category of finance: personal finance, public finance, and business finance. So personal finance, public finance, business finance. The business finance. So here our subject is business finance. Okay, our subject is business finance. The business finance for me, proprietary finance, partnership finance, company finance, and industrial finance. Okay, proprietary finance, partnership finance, and company finance and industrial finance. See, if you are go to the business BOM, business organization management subject, the types of organizations are there. Types of organization are there. So what kind of organization are there means sole proprietorship, partnership, companies, okay, joint in the family, cooperative societies. So these are there. Okay. So why the type of organizations are there means, so for increase the economy only, right? So in sole proprietorship, only single person is there. The economy is a limit to the only one person. So if you want to extend that, so one more we want. So that's where the partnership came. So your minimum to maximum 20 members in case of banking sector. So maximum is 10 members. Maximum is 10 members. And while go to the company sectors, minimum 7, maximum unlimited, right? So then it means the concept of this organization, everyone should participate in the business. So for development per capita income. So here our subject also like that the business finance for sole trader, partnership firm, company firms, and cooperative societies. Okay, so one by one we'll discuss. So first, personal finance. The personal finance deals with the financial affairs individual only, individual saving and individual investment, right? So individual investment in somewhere, may a saving account open in the bank, you are invested in some companies. As an individual, you are investing. As an individual, you are saving your money. So that is individual finance. And the public finance. This finance deals with mobilization or administration of public funds. Mobilization, save the money. Okay, save the money. So save the money, right? So save the money in public institutions for recycling. Okay, administration of public funds. It's covered aspect of relating a secured funds by the government from public through the various methods like imposition of taxes and borrowing from the public, domestic and foreign markets. So how the collecting, may saving, may deposits, may tax, may borrowing, may that is may domestic purpose or within the country or without border the country, out of the border of the country. So this is a public finance and finance, personal finance. But here our subject is business finance. The business finance may for the business may include, okay, you know, all business may include two, industry and commerce. Industry and commerce. So what is industry? Here in industry, we are making a product. Okay, for making a product, we want financial support. We want financial support. So we need financial support, right? So financial support for industry or commerce. Okay, the financial, the business finance is a term which applied the financial activity of trade, banking, insurance, transport, agencies, service, organizations. Okay, so for may commerce wise, may industry wise, so we want business support, business finance. So the business may collect. So as a business is have a separate entity, that is artificial entity. For example, as an individual, we don't have a money, we want some money, urgent you need, and we will go for borrowing somewhere from your relatives, your brother, and your friends, or your neighbors, or you are going to a institution, a financial institution, a bank. Okay, my bank, my finance, some finance institution are there. So from there you are borrowing some amount for a survival of your life. The same, the business having a separate entity, that is artificial entity, the artificial entity. So business also want a finance for survival of business. Okay, the business include, just now we discussed, that is my commerce and industry. My commerce and industry, buying and selling goods and service, and to make a product. So anywhere we want run the business. So we need a finance. We need a finance. Okay, we need a finance. So that is here the business organizations already we discussed in the book also they were mentioned. Sole trading firm, partnership firm, companies, and cooperative societies. Okay, so the finance for proprietors, sole proprietorship, finance for partnership, and finance for company, and finance for industries. Okay, and the proprietor finance means the sole trading finance, securing and management of funds by the individual only, individual organization themselves only. Okay, no other person, because in that only individual person is there, only single owner is there. So that's why he mobilize the funds only individual only. Yes, so individual only. So mobilizing the funds individual and themselves only. And the partnership. So here the partnership firm, they have mobilized the control funds by the partners, minimum 2 members, maximum 20 members. In case of banking sectors, so there are the 10 members are there. There are the 10 members are there. Okay, so 10 members are there. Minimum to maximum 20 members. In case of banking sectors, so 10 members are there. So they are mobilizing their funds. Okay, so they are mobilizing their funds. Okay, right, within the organization only. Right. Next, company finance. So this is important. Company finance, right? So here, if it is public company, the minimum 7, maximum unlimited. Okay, so is a private company, some limitation is there. Okay, some limitation is there. So how the company providing fund, how do the company provide finance to the company? So the Company Act 1956, recent Amendment Act is 2013. See, in partnership, every partner can contribute certain amount, some amount. Okay, so every partner contributes some amount to the business. So they are mobilizing themselves only. Each partner may introduce some amount to for the business. But what about companies, sir? Here many are there. So many are there. Sir, before go to the partnership, the person already gather before start the business, they will gather and they will discuss, they will agree and they will introduce the capital based on the agreement. But the company is not like that. The company will start, the proprietor will start the company, the promoter will start the company, and how much capital need for the capital, for the business, for the company, they will divide some parts. They will divide some parts. Okay, and they issue the parts will issue to in the market. The each part we are called as share. They will keep, they will put each share certain price, certain amount. That is share price. Okay, they will collect from the public. The company will collect the cash from the public. Who purchase the shares? The person we call as, the company will call as shareholder. Who are participating in the partnership? The person we are called as partner. Who are participating in the sole proprietorship individual business? We are calling the owner, proprietor. Right. So they are mobilizing the funds themselves. But here, the company mobilizing fund from public who are purchased the shares. So we are called as shareholder. Okay, shareholder. Then industrial finance. So for development of industry, okay, for development of industry, so we need finance, right? The company mobilizing funds from public. Then what about industry? What about industry? So industry, the industry is complete lending the money or borrowing the money from different financial institutions, different financial institutions. Okay, like IDBI Bank, Industrial Development Bank of India, right? So then next ICICI Bank. Okay, so the industry, so industry also so need for manufacturing, for making a product. So for making a product, the industry also need finance. So they are borrowing from some financial institutions. Like one example, IDBI Bank, ICICI Bank, right? So IFCI Bank, Industrial Financial Corporation of India. So these are, so now organization wise only means the based on, means where organization management is there, right? So first learn the organization. What is organization? So some organizations are there. So the capacity of size of the business or size of the business, the small scale organization, suppose sole proprietorship, it is a small, it's a limit to the one person only. And partnership organization is there. So between the some persons, minimum 2 members, maximum 20 members. If they want to do the banking cooperative like that, so they are maximum 20 members, 10 members only, right? So they are mobilizing their fund, they are introduced the capital. But while come to the, if sole proprietorship, the person only single partner will introduce the capital, he will introduce the capital and he will start the business. And one partnership firm, the minimum two, some members are there, for example, 10 members are there. Each member, each partner will introduce the capital in the business. They are mobilizing themselves only within the partners, within the organization. But while go to the company, so no one specially introduced. So before start the company, so the company how much fund, how much capital need. So suppose certain amount need. So they will divide some parts. Suppose 10 lakhs. So 10 lakhs, we need capital, we need fund. So 10 lakhs divided by 100. So we are going to keep each share 100 rupees. So 10 lakhs divided by 100. Right? So 10 lakhs divided by 100. So 10 lakhs divided by 100. So how many parts will come? So how many parts will come? 10,000 parts will come. So each part we are called as a share, right? The shares will be issued into the market. The shares will issue to the market. The public will buy the shares if it is public company, right? So who are purchase the shares, who are purchase the share, the person we call as shareholder, right? The company will collect the cash from the public, and industry also want finance for making a product for survival. So they will borrow the from financial institutions. Some banks, special banks are there for making a product, right? For industries. So that is IDBI Bank, ICICI Bank, IFCI Bank, Industrial Credit Investment Bank of India, Industrial Finance Corporation of India, Industrial Development Bank of India. So these are for encouragement. So why they are giving, why the banks are started for especially manufacturing means, so we want make for ourselves. So that's why the present government, so quotation is there, make in India, made for India. Okay. So for doing anything, so before before that, we want finance. The finance, so the sources, the finance for this type of organizations. Okay. So any other sources are there. Okay. The company issue the shares to the public. Okay. Suppose, for example, we have a certain cash, right? We want to start the business. Okay. So you have a certain cash, some 1 lakh rupees or 2 lakhs rupees are there in your hand. You want to start the business. Yes, you started. And you need more money. The 2 lakhs are not sufficient. So you are looking because you don't have a money now in your pocket. So you want. So what is the second thought? If there is no other sources, if there is no other aids to support the finance, so everyone will back again because support is important. Support is important. Yeah, the banking sectors are there. Some finance institutions are there. Some loans providing. So institutions are there. So we are going there and we are taking loan from them and we are running our business. We are running the business. Okay. So these are the supporters, right? So in commerce, see, when I am going to the commerce definition, buying and selling goods and services called as commerce. The commerce is divided by two, trade and aids to trade. Under trades, what comes under? Banking, banking act, insurance, transport, warehouse. So this here, banking and insurance, they are support, they are aid to the business. They are aid to the business. So we want. So that's why. So so what are the not only share capital. So if you don't have a sufficient capital, then go for the borrowing. So that is sources of finance we are called as, from where you are taking again. Okay. The source of finance may long term and short term. May long term and short term, longer period and a shorter period only. Okay. So the capital is longer period. So which shares you are issued to the public are purchase your shares. So you are called as they are a shareholder in the firm. The shares again divided into some types, preference shares and equity shares. So who are purchase the preference shares? They are not active in the organization. They are not participating in business. Just we are waiting for their profit. That means their dividends. And who are purchase the equity share, the person will participate in business. They will have a right to vote. They have a right to vote. So they are inside the wholesale preference shareholder are outsiders. Okay. So next. So what is the next sources? Long term sources. Finance sources we want. If finance support is not there, so we can't run anything. Okay. So if you don't have a finance, we can't run the business. So finance is important. Capital is important. Right? If don't have a sufficient capital, so we are going for liabilities. So what kind of liabilities are there? What sources are there? Okay, you don't have a sufficient amount and you are asking your friend, your mother, so your relatives, just you are going to other step. So other option you are selected. Okay, so what about business? The business have some entity, it's a personality, that is artificial personality. So business also, so we'll go to the second choice. Okay, so that is my debentures. Okay, debentures. How you are dividing a shares at the same time, but the business how much want again? So how many debentures they want issue to the public? Okay, so the debenture will issue to the public. Who will purchase the debenture? The person we called as debenture holder. On debentures we will pay interest only, but on shares we are paying dividend. Okay, on shares we are paying dividend, right? So on debenture we are paying interest only. Bond paper, like bond paper. So we'll write the paper and we are issued to the public. The public will buy the papers, and on that we are paying interest to them. So these are under loan from bank. Okay, so these are sources of the finance. Source of the finance, right? The short on the base of time period is a short period. So one by one will go on the base of time period, short-term periods, short-term sources. The short-term sources: borrowing, public deposits, trade credits. Trade credits means bills of exchange, provisions. Okay, so current liabilities. So what is current liability? For example, ma, current liabilities, under current liabilities. So I will tell creditors, bills payable, outstanding expenses, prepaid incomes. These are the current liabilities. Okay, these are the current liabilities. So what is a creditors? Creditors. So creditor means who supplied goods on the base of credit, or from whom you purchase goods on the base of credit. So the person we called as creditor, because he supplied on the base of credit only. You are not paid the cash immediately. You are taking some time to pay. So it's a payable to us. Is our sources. Is our sources. Okay. So is our sources. Why we are calling this a sources means, right? So if it is only cash transaction is there, if only cash is there, it's not possible. It's not run. So it's not so it's a little bit difficult to run. Okay, so for payment, you don't have a right now amount, but you need some goods. But you don't have a right to pay the cash. So you are thinking. So if any choice is there for due, we'll go for that. అంటే మనకి ఏదైనా అవకాశం ఉంటే బాగుండు లేట్ గా పేమెంట్ చేయడానికి. Yes, there is a choice is there, that is credit. But you are not purchasing. You are purchasing, but you are not paying cash immediately. You are taking a certain period to pay. Okay, for that we will prepare a documents, that is bills of exchange. Bills of exchange. Okay, these are one documents for trading purpose. For trading purpose, we are paying, we are preparing one documents, because the cash not realized, we are not receiving immediately and we are not paying immediately. So that you are giving a choice to pay, or you are taking a choice to receive it. Okay, so sorry, somebody is giving choice to you, and you also giving choice to somebody for payable and for receivable. Okay, that is the current. This is short period only, and this all are realized within the 1 year only, not more than 1 year, not more than 1 year. So within the 1 year should be realized in the cash. Should be realized in the cash. Okay, so may creditor, may debtors. So should be in the realized in the cash. Okay, next, long-term sources. So what is a long-term sources? Just now we discussed. But then the main long-term source of finance is share capital. Main long-term source of finance is share capital. Okay, the share capital, if you are divided some shares and you are issued to the public will purchase. Okay, so before purchase the shares, you are the common person in the society. When you purchase a shares of the company, you are a shareholder in the company. So which type of shares you are purchased? Which type of shares you bought? Preference, may equity. If you bought preference shares, you will be preference shareholder in the company. If you have bought equity shares, you will be equity shareholder in the company. Right? So these are main. Long-term finance sources of the company. And one more, debentures. Like shareholders, like shares. Yeah. So how much amount excess? So for example, 10 lakhs we issued, and the company act given permission to you for 10 lakhs, and more you need more amount. So then what can you do? The company act also giving charge, go through like this. You may you may borrow some amount, and you may issue for loans documents, or you may borrow from the banks. So that is in the one of the second long-term source of finance is debentures. Then go to the long-term bank loans. Long-term bank loans. So this is a source of finance, long-term source of finance. And next, on the base of origin, internal sources and external sources. Internal sources and external sources. What is internal sources? The mobilized funds from the within the company through the operation. This including depreciation, return, earning, and resource and surplus. Okay. So internal sources. So saving your funds yourself only. Right? The company earn the profit. In that profit, certain percent transfer to resource, certain percent transfer to the operation purpose, certain profit transfer to the surplus purpose. Okay, so when you are save yourself, don't spend, don't transfer the total profit for the capital. You may transfer certain amount to the resource. You may transfer certain amount from operation purpose. So then we also mobilizing our front ourselves only within the organization. Okay. So next, external sources. So what is external sources? The external sources outside of sources include funds from the issue of shares just now, debentures, bank loans, financial institution, intercompany loans, foreign capital, everything come under so in external sources. These are the two bases of financial sources of source of the finance, business finance. One is on the base of time period. Under time period is short term and long term. Under internal on the base of origin, internal and external. Okay, internal, external. So the source of finance here again divided to external and internal. The origin is continuing, external and internal. External out of the business. Go through other parties. So you are not asking your mother, father, and within the family, and you are asking from others. So here also, you are not depending your resource, you are not depending your profits, because why you are going out means there is no sufficient. So that's why we are going to out. Yes. So that is external and internal. External share capital, this is number one. Just now we discussed. The share capital is may divide into two. That is preference share capital and equity share capital, and the debentures, borrowings from bank, borrowings from financial institution, borrowing from public, borrowing from foreign trades, foreign countries or foreign banks or foreign capital. Okay, and trade creditors. So these are the external. So we are our sources is there. Our sources is there. So external only. So not other than the business. So other than the business only we are collecting. Some we are collecting on a profit basis. Okay. Some we are collecting on interest basis. Some we are collecting on operating basis. You are giving sales to the somebody. So please operate yourself. Operate that is security shareholder, because we are giving right voting right for them. And who purchase the preference shares, we are not giving voting right for them. Okay, so these are the source of finance, external, internal. Okay, and again, The preference shares, debenture also like a debenture, preference shares also again the debenture also some types are there. Secured debenture, unsecured debenture, redeemable debenture, irredeemable debenture, convert debenture, non-convertible debentures. So some types are there. Okay, so this is the finance of and external, internal. So internal returning earnings, provisions, depreciation, and others. So we are creating a fund. We are creating ourselves only within the firm. Okay, so this is the source of finance. Yeah. And what is functions of finance? The main function of finance. So why you are? What is the function? So my function is this is my objective is this is. So what is the finance objective? The finance objective is investment decision. Okay, investment decision. So next financial decision, then divided dividend decision. Okay, investment, the investments on what? Okay, suppose the shares you are issuing for a purchase of a large plant, a construction of a building, a purchase of 5 acres or 500 acres land. Okay, your investment on that only. So decision for that. So we have a large construction, we building. So you are issued shares for that, and you are borrowing for that. That is investment purpose. Okay, investment purpose. And you want to purchase a heavy machine plant. So on that you are purchasing, on that you are investing, investment decision. Then next, the investment is on asset, plant and machinery, furniture. Some are fixed or some are current. Next, finance decision, determination of capital structure and determination of cost of capital. So cost of capital means long-term loans, debenture, bank loans, loan from long-term and equity shares. Okay. So next, dividend decision. The dividend decision finance manager required to carry out. The decision also related to the retention of profit. The manager must decide whether the firm should distribute all the profit distributed portion and retain the balance. So we are, because the shareholder purchase the shares in our company, so we have to pay dividend for them. May middle of the year, may end of the year. So that is based on the profit only. Based on the profit only. You are distributing that. Okay. Again, in shares, in preference shares, some types are there. Okay. From cumulative preference shareholder, non-cumulative preference shareholder. For example, cumulative, non-cumulative. Cumulative, you know, cumulative frequency, CF. Right? So in business statistics, CF is there. Cumulative, one by one, we are adding. The value of cumulative will increase one by one, one by one. If it is smallest value, small value is there, frequency small value is there, but if the cumulative will increase, automatically cumulative will increase. Yes. So if you got loss for cumulative preference shareholders and we are not ready to pay dividend for them this year because we got loss, and in second year you got profit, pay both years dividend, last year and current year. That is cumulative preference shareholder. Non-cumulative preference shareholders, if you got profit, you will pay dividend them. And if you lost, we never pay them. Okay. And next year you got profit. For next year only you will pay. So we are ignoring the last year. So these are the disadvantages again for it. Okay. So these are the functions of the finance. Yeah. One more, nature of financial requirements. So nature of financial requirements. Okay. The nature of financial requirement. The nature of financial requirement. right? The funds for longer investment and the funds for ongoing recurring investment on current asset. So long period may land and building fixed assets. Okay, so we are investing on that, right? Just now we discussed. So for uh, current assets, buying and selling goods, cash, cash, cash balance, book dates, finished goods inventory. Okay, next, next, and the tools of financial planning, cash budget, pro forma income statement, pro forma balance sheet, capital expenditure budget. Okay, and remaining discuss next class.